Hi, I'm Amelia Bourdeau. I am the host of Clarity with Diamond Standard, and this is a podcast that discusses investment themes that impact the diamond commodity and wider precious metals market. I'm happy to be joined today by Paul Zimnisky, who is a leading independent analyst, and his company is Paul Zimnisky's Diamond Analytics. Paul, welcome. We're so happy to have you here today.
Hi, my pleasure. Thanks for having me.
I'm wearing I have like all my diamonds on just to speak with you today. So I'm very, very excited. I got ready for this.
Looks good.
um, I wanted to talk first about the pandemic and global luxury demand during the pandemic, because I want to give the audience a sense of how strong that was and what impact it had on the diamond industry, and then what the impact is today, right now.
It was, it was a generational event. Global diamond jewelry demand was probably up, anywhere from 25 to 40, 50%, depending on, what market or what category we're talking about. It was pretty much across the board. It was such a strong period of demand that most of the supply chain, was able to exhaust inventories that were built up probably over the previous decade. Very unusual event. The diamond, jewelry industry has probably been growing at, anywhere from, a low to mid-single digit percentage rate if we're looking at compound annual growth rate over probably the last, 25 years. And again, we were up, 20, 30, 40, 50%, year over year if we're looking at 2021. And I would say, since then, 2022 was a relatively flat year, which was a very good year coming off of 2021.
Mm-hmm.
A lot of the trade was able to pass along inflation adjustments. So I think if you look at top line sales, they were relatively in line, maybe down small compared to 2021. And then, expectations for 2023 was that there would be, a notable softening, that, sales would be down, a mid-single digit percentage. But what we've seen so far in Q1 is that trends from last year are continuing, meaning that sales remain in line with 2022. So we're kind of holding that high watermark achieved in 2021. And again, it's a nuanced industry, so it depends on what categories we're talking about. But by and large, I think so far the industry has surprised to the upside year to date 2023.
Yeah, there's a lot of concern, rightfully so. When I kind of read trade publications about the strength or maybe the coming weakness, perhaps anticipated, of the U.S. consumer, who is the largest consumer globally of diamonds. But so far, employment is quite strong still in the United States. We're recording this today in May 22nd of 2023, and we still have strong employment so far. And the luxury goods sector, that's not representative of all consumers, certainly, but we just had results for like LVMH and Richemont, and their jewelry sales were very strong as well. So what do you think about the U.S. consumer perhaps ahead?
Yeah, so LVMH and Richemont, they're the two largest luxury conglomerates in the world. So LVMH notably owns Tiffany, Bulgari. Richemont is the parent of Cartier and Van Cleef. So these are the notable high jewelers in the world. They just continue to crush it. Both these companies just had record Q1s, double-digit sales growth. There definitely has, I would say, in the, recent decades, there's been a clear bifurcation in the industry where you have the generic market and then you have the branded market, and the top brands just continue to outperform. Branded diamond jewelry continues to be extremely popular in China. The U.S. market, continues to remain strong. The European market strong. Japan, has had a really nice comeback. So that branded segment continues to notably outperform. And it kind of goes back to, we just can't forget diamonds it's a luxury product. It's an emotional purchase. People buy it because they like the way it makes them feel. And this is an industry where you can, throw money at the problem with marketing dollars. And if you do that right, consistent, over a consistent enough period of time, and execute, marketing and branding strategies right, um, the best case is you end up like LVMH and Richmond, and it takes years and years and years and lots of persistence. But these companies have done so much right. They're both very, very well-run companies, and it's a proxy for the larger luxury market and for the jewelry market. But again, this is primarily the high jeweler branded market, which has dislocated to an extent from the larger jewelry market, in recent decades. But it still shows that there's definitely still strong demand, and consumers are continuing to buy high end luxury items, high end material items. And we just kind of continue to see that play out with those two names in particular. So that's pretty optimistic.
Right. I know Tiffany's just reopened its flagship store in Manhattan, Midtown Manhattan, after a big, I guess, renovation, multi-year renovation. I have not been to it yet, but I've gone by it. Have you been in by any chance?
Yeah, I mean, it was years in the making, and I think they started it before LVMH acquired it. And when LVMH acquired it, they kind of wanted to redo it their way, and I think that's why there was the delay. And then you had the pandemic delays. But I mean, that's probably the most famous jewelry store in the world. That one store generates like a notable percentage of Tiffany sales. I think I don't know if it's 1, 2, 3%, but it's like an actual note. One store generates a notable amount of sales for that very large global company. So, but it gets back to what I was talking about before, where I mean, marketing does matter, and I think the diamond industry does great when there's proper marketing spend and execution. This kind of goes back to the history of this industry, when you had the De Beers monopoly, and De Beers was actively um, executing that Diamond is Forever campaign, which wasn't just a marketing campaign. I mean, it kind of went deep into the supply chain, where they would actually go and they would train front end sales associates at independent jewelers on how to sell diamonds. And then when the monopoly was dismantled, and between 2000 and 2005, the industry lost its way a little bit. De Beers basically was saying, we aren't going to spend all this marketing money, to basically to benefit our, of our competitors as well. We're just going to, start marketing our own, diamond lines, and that's what Forever Mark is, and De Beers jewelers and that sort of thing. But after about a 10-year lapse of generic marketing, the industry basically came together and said, we're kind of losing sight of what makes this industry work best, and that's having a kind of a collective campaign. And that's when the industry reinitiated generic marketing through an entity that's now called the Natural Diamond Council. So the industry is kind of getting back on track with that. But marketing is key here. It's going to remain key here. It's a luxury product. You have to generate that desire and that emotional demand. And when the industry does that well, it does great. And when it doesn't do that well, it lags behind.
Yeah, no, for sure. The Natural Diamond Council, and maybe we can link it in the show notes as well, just came out with recently a report. I know you kind of contributed data to that. It looked like you were cited in it, about facts on the diamond industry, which was a very interesting and useful report that they had out. Yeah, for sure. So I wanted to talk a little bit about also supply of diamonds, just to give our audience, you know, a heads up on the dwindling, I guess, supply that's ahead, maybe mines coming offline. And the industry believes, is that correct, that we've already seen peak like diamond supply?
Yeah, I wouldn't necessarily look at it as that. I mean, we clearly, made a mistake, with that, in terms of oil and peak oil and what that meant. That was kind of the big story, when I was starting my career on Wall Street. The way to look at this is, it's supply for commodities in general is cyclical, and it's tied to prices. So as prices go up, more, deposits that previously were uneconomic become economic.
Right.
And I remember, starting my career, the portfolio manager that I worked for, he was a geologist, and he said, most people have gold in their backyards, and it's true, but it's in such a small quantity, it would never, ever, ever make sense, to actually to dig up your lawn and try to process the gold. But the point is, there is theoretically there is a point where the price of gold would get high enough, and it would actually make sense to dig up, those tiny, particles of gold in your lawn. So, I mean, that's like an exaggerated example, but the point being is, we do have, there are undeveloped diamond deposits in the world, that if the price got high enough, you would see them go into production, but there aren't enough of them, right now at current prices to put supply back to what it was, say in 2017, global diamond production was, say, between 150 and 155 million carats. We hit like a, kind of a near-term low in 2020. Production dropped, close to 110 million carats, which was the lowest output since the 1990s. And now we're going to probably be in a range, I'm forecasting, of 115 to 125 million carats through at least the end of the decade. And I'm pretty confident with that projection because it takes so long to put a new mine into production. So if, diamond prices theoretically went up 50% this year, we wouldn't see new supply come online in 6 months. It would probably still be anywhere from 2 to 5 years away, given the permitting that's required, given that it, takes multiple years to build these mines.
Right.
Diamond mining in particular is relatively complex from just a scale standpoint, not necessarily from a processing standpoint, but from a scale standpoint. You can't just mine a gold vein, like you would with precious metals. You need to typically do large bulk mining campaigns, given the low grade of diamonds, because natural diamonds are pretty rare.
Right.
But the point being is, for the foreseeable future, I don't think we're going to see any significant increase in natural diamond supply. I think that's actually probably bullish for the fundamentals of the industry if they get the demand side right. And again, at the end of the day, I mean, when we're talking about engagement ring size diamonds and larger, they're extremely rare. There's probably 50 commercial scale economic deposits that are currently in operation today, and the industry is kind of disproportionate in that there's probably 10 diamond mines in the world that are extremely economic, that are extremely profitable, that are extremely valuable, and then you kind of have everything else. And those 10 super economic mines are owned by De Beers and the Russians. So
Right.
it's kind of interesting when you look at supply from that standpoint. I mean, De Beers' top mine, Zhuaneng in Botswana, it produces, I think it's 15% of total global diamond supply. That's just one mine.
Right.
So it just kind of shows how disproportionate the supply is in the industry.
Concentrated.
And right, and I mean, and diamonds they are pretty rare.
Yeah, I loved there was a graphic in that Natural Diamond Council report, which is really I thought was stunning that they mentioned that annually all the 1 carat diamonds mined in the world would fill an exercise ball, and all the 5+ diamond carats mined annually in the world would fill only a basketball. So I thought I don't know, that was a very clear graphic to
Yeah, it
me.
puts it in perspective. Yeah, I mean, they're pretty rare.
Yeah. Maybe you mentioned it just now, the concentration of diamonds between Alrosa, which is a state-owned Russian diamond company,
Right.
and also De Beers, who mines mainly in Botswana. But can you talk a little bit about the monopoly of De Beers and it being dismantled? You mentioned in 2000 to 2005, because we do get this question a lot. Um,
Yes, I mean, just for clarity, I mean, De Beers no longer holds a the quote unquote proverbial stockpile. There was antitrust legislation passed in the U.S. and Europe, a couple of decades back, and it definitely changed the way that the industry fundamentally works. It doesn't mean that De Beers won't hold an inventory, and it's daytimes like the pandemic where there was really no market to sell into. They have a balance sheet where the parent company is Anglo American. It's a large diversified mining company. They have a balance sheet where they could say we just aren't going to sell into a frozen market. We'll just wait a few months, and when demand returns, we'll sell at what we believe is a fair market price. So you will see some of that. So it's not like they hold zero inventory, but they don't hold a strategic, stockpile like you read about in your college, economics textbook.
Yeah, interesting. And I guess it's been interesting all this weekend with the G7. It's no mystery, or there's been many press reports, especially in the FT, that have said, the G7 wants to further restrict or trace uh, diamonds from Russia, but it's just a pretty difficult thing to do. And it didn't seem like much came out of the G7 this weekend in terms of, a concrete example of how they were going to sanction and trace the Russian diamonds. But I would imagine that any further sanctions or any ability to trace and block those Russian diamonds would just further restrict supply to Western countries, right?
Yeah, so it is notable because Russia produces, say approximately a third of the diamonds in the world. I mean, it's the largest producer from a volume standpoint, at least. And then if we look at the quote unquote Western consumer market, which we're going to include Japan and Australia, we're looking at almost 3/4 of global diamond jewelry demand. The U.S. is half of global diamond jewelry demand alone. So you're going to continue to see more and more restrictions on Russian goods flowing to Western consumer markets. And there should be a net a shortage of non-Russian goods because of that. That said, it's not like the industry is just going to lose a third of supply. I mean that Russian supply is going to end up being routed to consumer markets in China, India, the Middle East.
Right.
But given how large of a disproportionate consumer the Western consumer market is, it's going to I think it will be felt. And at this point, it's just kind of coming up with a way to implement these sanctions on a wider level and be able to effectively enforce. And I think that's kind of the challenge. So if you look at what's happening at the G7, I think they're taking this seriously. They definitely want to implement some sort of plan here. It's just coming up with a way to do it effectively. And I think it's going to happen. It's just a question of how long is it going to take
Right.
to come to a conclusion.
Yeah.
But I would note that you see how the U.S. implemented sanctions on Russian diamonds in February, March, April of last year. But even possibly most notably is you have almost all of the major Western jewelers at this point in time have self-sanctioned. So the technicality is you could, in America, you could still import a Russian diamond as long as it was cut and polished outside of Russia and sold outside of Russia.
Right.
But you look at like the LVMHs and the Richmonts and the Signet Jewelers, which is the parent of Kay and Zale. They, shortly after, February 2022, they came out and said, we are not going to buy any diamonds. We're not going to source any diamonds of Russian origin whatsoever.
Mm-hmm.
So I think that's actually had a bigger impact on the market than the sanctions themselves. So I think, when we're looking at what's going on in the G7, I think it's just going to kind of ramp up kind of what we've already seen play out over the last year and a half.
Yeah, no, I agree. So I want to turn now to a more controversial topic, which is lab grown versus natural diamonds, of course, and your thoughts on maybe how this could evolve. I mean, there's so many things going on from the terminology of lab grown. Should they be called lab grown? Should they be called synthetic? What should they be called? Kind of the marketing around the lab grown diamonds. So much to talk about. I mean, the price decline in lab grown diamonds. What's your first thought when you speak about lab grown diamonds?
Yeah, it's a fun thing to cover. It really is. I think this will end up in economics textbooks in the future.
Yeah.
It's pretty fun to watch it play out. I've been covering this very closely for, almost 10 years now. So, when you see it kind of covered in mainstream media and they're talking about it as like this new product that's going to change everything, it's like, to me, it's kind of
Well, when did
old
they
news.
here? Like, when was the first? You said 10 years ago was the first lab grown diamonds.
No, so we've been able to produce synthetic diamonds since like the 1950s, but up until 10, 15 years ago, it was almost exclusively produced for industrial applications. So if you go to Home Depot and buy a tile saw blade that has diamond, it's most likely going to be synthetically produced diamond that was made in China.
Right.
To put this in context, so we were talking about natural diamond production, say, is going to be 120 million carats this year. The Chinese are going to produce 10 to 12 billion carats of synthetic diamond for industrial application. So that just kind of gives you an idea of the capacity of, manufactured man-made diamond. It's a manufactured product. We can produce, as much as we want.
Hmm.
Now with the emergence of man-made diamond for use in jewelry, this really started to take off, probably within the last 5 to 7 years. But even the jewelry product has been available for probably 20 years at this point. It just got more recently to the point where they could produce it at low enough price points where it was attractive enough to consumers. Because in 2015, you could have bought a piece of lab diamond jewelry, but it was probably only 10% less than an equivalent natural diamond. So consumers just really weren't that
Yeah,
interested. Today,
ridiculous.
you can buy it at 90% less. So it's definitely making diamonds much more affordable to a much larger part of the population. I think what we're going to see is companies like Pandora, which is the largest fashion jewelry company in the world. They're known for the charm bracelets. They recently launched a lab diamond jewelry line. I think it's a perfect fit for a company like that. And they said their goal is to quote unquote democratize diamonds. And I think it's a viable strategy. And I think they're going to do well. I think companies like Swarovski are going to do well. I think they're positioned right. And there's going to be some companies that build a brand or do something unique around a man-made diamond jewelry line. They can get a premium for it. But I think by and large, there are companies that are selling a generic man-made diamond, and they're basically just trying to ride on the coattails of the natural diamond industry. And I think that worked for this kind of intermediate period of time, but I think it's going to get old, and it's that the price of lab diamonds have dropped so dramatically
Hmm.
um, over the last 10 years that I think the price point gets so different from that of a natural diamond that consumers are just going to ultimately perceive it as something different. I think a consumer that's going into a jeweler with an $8,000 budget to buy a 1 or 1.2 carat diamond engagement ring, I just don't think that consumer is going to walk out of that store with an $800 lab diamond. I just think it's the price point so different. I think
Yeah.
the what it kind of represents is so different. And again, this isn't a practical purchase. I mean, if we're talking about diamonds for use in industrial application, I think you just want the lowest priced product that can perform the best on a relative basis. But with jewelry, it's not about that. It's about the emotional purchase. It's about how it makes you feel. It's unique. It's a luxury item. It's how
Yeah.
people treat themselves, and they give it as a meaningful gift. So I think this is
Maybe
why
even an heirloom, maybe even an
of
heirloom
course, yeah, and
down, that they
right,
want whole value and emotional value and monetary value to both.
and that's why I wouldn't bet against the natural diamond industry. Now, this is all assuming that we can continue to distinguish between natural and man-made diamond indefinitely. I mean, I have a podcast of my own. If anybody's interested, I've had multiple gemologists that are the best in the world at what they do,
Yeah,
and
it's
I
great. You
ask them,
have fascinating guests. I listen to it.
yeah, and I asked them, that question. I mean, is there ever going to be a point in time where we can't distinguish? And most of them say no. It's like it's an arms race. The
Right.
producers are going to come up with ways to try to make it more difficult to distinguish from natural. You can always have those, unscrupulous individuals that are trying to pass off, man-made as a natural. But
Hmm.
then you have, the natural diamond industry has a lot, at stake to make sure that doesn't happen. And there's a
Right.
lot of money being spent, by the gem labs to kind of continue to improve their technology so they can kind of keep up with the producers. So and this has been going on for years now, and I think what we've seen is that the gem labs certainly have been able to kind of keep up and
When you say gym labs, you mean like the graders, like IGI or GIA?
right, exactly, yeah.
Why
um,
do they even grade the lab grown diamonds? I mean, I know they can be distinguished from each other in terms of carat and because they have different price points. But I guess at some point, at some point, there's like a supply issue in terms of, I would think that lab grown producers would get together. I mean, this is the economist in me talking, would get together. And I mean, there's so many of them popping up and the price is falling that why do they keep opening, like new suppliers? It seems like it doesn't make sense almost. They're just driving the price down.
yeah, it's I think we're in a bubble territory. I mean, lab diamond production for jewelry, I mean, it's been doubling every 2 years. It's recently exploded in India. The government's subsidizing it. They want, they see it as an export industry. That they can continue to grow at a notable scale. But you get to the point where the supply is just, growing at such a rapid pace. I don't see how demand's going to keep up with it. I think a lot of these man-made diamonds are going to end up on Amazon and
Hmm.
Alibaba and China at pretty highly discounted prices, which again I think it's kind of the natural progression of a manufactured product.
Right.
Um, but I think there's going to certainly be tiers on the lab grown diamond side of the business. People that got in too late or aren't doing anything that's kind of unique or special. And then you
Right.
have companies that are in this for the long game, and they're man-made diamond companies, and they're taking an ethical approach to marketing. They aren't misleading consumers, and they're trying to build a brand and saying, I'm going to produce a diamond made with renewable energy. It's going to be produced in America, and I'm going to offer a product for the customer that wants that, and I think they're going to do okay. But
Right.
there's a lot of companies that are just trying to produce as many as they can, kind of use greenwashing around the marketing for the product, and then just try to take advantage of this intermediate phase where there is a lot of buzz around it and consumers are probably overpaying for the product, but
Right.
it's a new
And they're
product. There's a lack
confused
of
too. I feel
understanding.
like when I speak to people about lab grown diamonds, they don't really understand it. And I think, I mean, they're all over Instagram, for instance, like all the ads. And, some I think distinguish it, just in my opinion, and some, it's not even clear to me if this is like a natural company or a lab grown company. So it's interesting. Just when you see that initial like
Right.
Instagram.
Yeah, and I think that's ultimately gonna probably be what leads to the downfall. But there's that risk that it's just that there could be negative publicity for the overall diamond industry, and people just give up and they say, I don't want any diamond because I don't trust you guys,
Yeah.
and that's a real risk too, and that's I think why there's a lot at stake here, and I think I think the industry will prevail. This is if we look at the natural diamond industry, it's one of the most resilient industries I've ever seen. They've historically done a lot right. And I think there's a reason that diamonds have remained as relevant as they have, while continuing to bring in new markets. I mean, 30 years ago, Chinese consumers really didn't buy diamonds. They didn't give diamond engagement rings. Now, diamonds are quite ubiquitous in China. So
Yeah.
um, the industry has a pretty impressive track record, and I wouldn't bet against it this time.
Yeah. We were speaking, we've spoken before, and we were speaking one time, and I thought something that you said was so true that you never hear about someone robbing like a lab grown diamonds like
Right.
gym lab or something because yeah, they know that the value obviously isn't there.
Yeah,
And
you
I
don't see lab diamond heists or thefts. That just you don't ever see that headline. So I think that kind of speaks for itself.
Yeah, it's so interesting. And then I do like your point, which is very interesting too, about eventually consumers, will know the difference between lab or natural just because of the price points, and then question
Right.
why would I buy something at such a low, maybe they won't assign economic value to a lab grown when the price drops so much. So they can distinguish it themselves, and that's really interesting
Right.
as well. Yeah. Well, is there anything else you want to mention to us that I didn't ask you that you see as relevant, for this year? Any diamond industry themes or?
Yeah, I think we covered the big things. I mean, I'm just, as an analyst, I'm watching, the reopening of China. That's going to continue to be a big demand catalyst this year. The whole lab diamond thing, we'll keep an eye on prices and see if we see that market continue to bifurcate. And then, obviously the situation with the sanctions on Russian diamonds, that's going to be a big, supply catalyst as that continues to play out. So, and then you have the macroeconomic backdrop. I'm kind of in the camp that we're going to see more of a soft landing than a hard landing. So far, I
Mhm.
think I've been right on that, but there's a lot of moving parts and a lot of potential catalysts that could change that, very quickly. So we'll kind of keep an eye on the macro backdrop. But so far, it seems like the U.S. market, has been pretty resilient, but it's certainly a volatile time. So we'll see.
It is. It's a very interesting macro time, and coming to the diamond industry, it's so interesting and so many moving parts. But we'll see how it all evolves, and maybe have you back on. Thank you so much for your time today, Paul. We all appreciate it.
My pleasure. Thank you.
Materials presented are not intended to be a recommendation, solicitation, or offer to buy or sell any securities, financial instruments, investments, or to participate in any particular investment strategy. The content and opinions expressed are subject to change without notice and should not be considered as a guarantee of future results, performance, or outcomes. Before acting on any information or content presented herein, you should consult with a qualified financial professional, tax advisor, or legal counsel to determine the suitability, risks, and potential rewards of any investment or financial strategy for your individual circumstances, financial situation, and risk tolerance.